Mark Selby, CEO of Canada Nickel Company, advancing the Crawford nickel sulfide project and unlocking the Timmins nickel district.
Mark, hello.
Great to see you again.
Good to be here. Good to be here. Well, pleasantries over. Should we talk business? Right.
Yes.
First of all, like Beaver Creek seems we're busy out there, and I saw you a few times in meetings out on the terrace.
Yes.
How's it going?
Oh, excellent. I mean, again, given the news flow that we've had the last few weeks, we've had great interest already. And the fact that we've got, a letter of interest from the Export Development Canada for $500 million US. When you add that into the $600 million US in refundable tax credits we get from the government, $100 million from Samsung, you start to put that capital stack together and realize there's really only a $300 to $400 million hole that we need to fill, and we're working with Scotia and Deutsche Bank to fill that hole. Then you get a lot more.
At project level, it needs to be
at
said.
the project level, yes.
Okay, and I think this is important because the whole economics has always been, I guess, the backdrop of all of our conversations. Because people go, oh, the grade's only this, and the scale's this, and the amount of money you need to put together is that.
Yeah.
And you talked to me a couple of years ago, say, look, we'll put the economics together, and then we'll work out this financing, the stack of money, what color it is, and what it costs us, and how we do that. Can we just have a more holistic conversation today, right?
Yeah.
So how does it all work? You put out an announcement like you did today.
Yeah.
Should we run through that for us? Because there's some big numbers and some big those, and there's like 7 different projects we're talking about.
Yeah. So we already have 2 resources. Crawford, the original project, we announced about a month ago that the Deloro resource, which will be the first of 7 additional resources that we'll publish this year, and then we published drilling results on 7 different targets outside of the 2 targets that we've got. So over the last 18 months or so, we've really been sort of pushing. Crawford's a great project, second largest nickel reserve, Western world's largest nickel sulfide operation when fully ramped up. But we're really talking now about unlocking what we think the Timmins nickel district is going to be, the world's largest nickel sulfide district by the time we're done. And, in one release to be able to talk about 7 different targets, I think is
resources as
and
well.
Yes,
right?
with 6 of them going to be resources by mid next year. We think pretty unprecedented in the explorer developer space.
So maybe that's the kind of scary bit for people here is that a few people come on and talk to me about district-wide potential, like in the gold space or copper, whatever they're hunting, right?
Yeah.
And I usually kind of titter to myself because they go, that's not necessarily an asset, that's a liability, because that's going to cost you money to kind of get through. You've come up with a way, for nickels, it's slightly different, right?
Yeah.
In the sense you've been able to kind of quite efficiently put together resources so far, and I guess will be the same by the middle of next year. Same. Explain how you go about doing that.
Well, I think, one thing, again, for people who've been following us for a while, 18 months ago, we talked about a capital stack in terms of the debt that we need, the equity stack, that we believe we can put an equity stack together that doesn't require going back to equity shareholders, to fund that stack. And so, in terms of EDC's there for $500 million US. In terms of the equity stack, we've got $600 million US in refundable tax credits. We've got Samsung SDI in for $100 million of that, and again, that's that $300 to $400 million. Not that we're looking for a project partner to come in and fund that money, so we don't have to go out to our shareholders in a big way to get that additional money. So, it's one thing if you have to go back to your shareholders and ask for a pile of money and say, oh, guess what, we're going to do this 10 times over the next 5 years. Yeah, from a shareholder perspective, 1 billion shares later, not very excited. But, to the extent that project 1, you can get through, without having to have, a substantial amount of additional dilution going forward. And then, in today's releases, we've got Reed, which we think is going to be a bigger, better Crawford. That's there. We've got another 3 targets that we talked about today. If you take the dimensions of strike length, width, and depth, those 3 are 1 billion tons, potentially each, if you do the math. And so, but if we're in a period right now where governments want lots of nickel from safe countries, and so, to the extent that we're in a position as one of the few companies that can bring new projects to bear that can take advantage of this effectively free capital from government to advance them, and then have the team that's been able to execute it. I mean, again, I'm very, very proud of our team to go from 4th drill hole, 5th drill hole to where we are today, a year away from permits
Yeah.
in 5 years, to be able to then take that same model and
Yeah.
then just cut and paste that, around the district,
Yeah.
and get to a point where, outside of Indonesia, hopefully Timmins will be the next largest nickel producing area in the world.
That's some vision,
Yeah.
isn't it? Right.
Yeah.
And it's been hard yards.
Oh,
So
yeah.
let's not kid
Yeah, yeah.
ourselves, right?
Yeah.
In terms of what you set out to do, it's a short time frame, but in terms of the market vagaries, in terms of the nickel price ripping back,
Yeah.
it's been, and we've been talking about that most weeks.
Yeah.
The level of understanding for the nickel market is perhaps not as solid as, say, gold.
Yeah.
The understanding around how you develop district-wide plays and the time frame that can usually takes to do that, not understood. These capital stacks and allocation of equity, from others,
Yeah.
it's not diluting
Yeah.
your shareholders, is little understood. It's been a tough message.
Oh, it's been a lot of education and
Yeah.
a lot of time and effort to get there. But I think, for again, people listening, you've got, low grade, what's this low grade crap? There's no way you can make any money
Right.
doing it.
Argument
However,
number one. Let's
yeah,
go.
we've got Anglo-American, right? One of the
Yeah.
world's largest mining companies came in 18 months ago and took, 10% of the company at the time. Earlier this year, we got Samsung SDI, one of the world's largest battery makers. Again, they're in Asia. Lots of nickel in Indonesia. If they just wanted Indonesian nickel, there's no, there's
Yeah.
no reason to fly, to Timmins and Toronto.
Air miles.
Air miles, yeah.
Only reason.
Exactly.
Yeah.
They want to rack up some air miles to maintain their status.
Yeah.
They're there because they want clean, green, IRA compliant nickel.
Yeah.
And we're one of the few new sources that can deliver that nickel. And then we did the deal with Agnico Eagle. Again, in terms of the district, most of Agnico Eagle's NAV, probably 2/3 to 3/4 of it is within a few hundred miles of our Timmins land package.
Yeah.
And so, it was basically, here's a whack of money that allowed us to raise even more money as charity flow through. Go drill it. Prove to us,
Yeah.
that you've got a district. And, again, today's release with
Yeah.
drilling results from 7 different targets, I think goes a long way. And then hopefully by before mid next year, we've published 6 additional resources. We've got 8 additional resources. And again, if you do the math, you can get to a point where, we've got more contained nickel than anywhere else.
So let's
nickel sulfide nickel than anywhere else in the world.
Right, but we got to bring this back, as all businesses do,
Yeah.
to economics, right?
Yeah.
It's all well and good having it, but if you ain't making money, what's the point, right?
Yeah,
So
100%.
I hear you, and I do want to come back to the kind of clean
Yeah.
and green component, because that's the driver here
Yeah.
for, say, groups out of Asia coming all the way to Canada to solve their problems. But the economics, right? The low grade bit, and I know we've had this conversation,
Yeah.
and we're going to keep having this conversation until people get it, right?
Yeah.
So what are the comps to this, and how do you describe to a Samsung or other, look, this is how the economics stack up?
Yeah, I mean, the world doesn't mine high-grade copper. I mean, other than, Robert Friedland, maybe in the Congo, where the bulk of the world's, the next round of copper projects, whether in the Argentina or in Chile, are really 0.3, 0.4, 0.5 copper. It's only 0.5 copper for the first X years. But those are in places where you have no infrastructure, no water, no people. And so you have to spend billions to develop the infrastructure, and then you spend, another couple $1 billion to build the mine. Our material is still great, but it's found in an area where you have access to relatively low cost power. You have all the major infrastructure in place. There's no issue with water availability in the area. And then you've got a bunch of communities that actually like mining. And we've got in those communities, populations more than 60,000 people, all within an hour's drive of the mine site, and are excited by the fact that, Cochrane, one of the main communities, is already, basically building out a new 1,000 house subdivision and running raffles to basically get people to move up there. And so when you look around the world, there's very few communities that are excited to see mines open. And we're fortunate that we're finding this nickel in a place where people do want, the prospect of having not just Crawford, but maybe 3, 4, 5 other mines in the area of the scale that we're talking about, they're really, truly excited about. I mean, Detour, which is one of Agnico's mines just to the north, that's on its way to becoming a million ounce mining operation. And that's the flagship asset in the area, and we hope Crawford's going to become the next flagship, and then Reed, and then
right.
A bunch
Okay,
of
so
these other
social
projects.
license, hopefully, sounds like not so much work to do, and as you say, no NGOs, trying to stop any mining going on there, get short shrift. But just back to those variables, right? Because grade definitely helps. We shouldn't say we don't mind not having low grade. Grade, the better the grade, the better it is. But there's a whole bunch of variables which go to define the bottom line of the economics. Right. As you describe some of them.
And that's the perverse thing, that actually these big disseminated ore bodies are actually in a lot of cases simpler and lower risk. Most high grade deposits, whether it's gold, copper, silver, they end up being this veiny, irregular, systems that you have to drill. You spend millions and millions of dollars drilling, to be able to define them, at close enough spacing to be confident. Okay, the silver vein, when I go to mine it, that's there. Yeah, turn left, turn right. Stopped, pinched out entirely. Yeah. Right. And then, so in our case, it's a big disseminated ore body. Like your cost per pound to drill that off is very, very small. The geological differences between this point in the deposit and this point in the deposit, it doesn't vary much. Across
it's more predictable.
Tens or hundreds of meters is very predictable. And so the key there is you just need to say, okay, I only have this much value per ton, so I'm going to use really big trucks, which gets my mining cost down to this per ton. I'm going to build a very big mill, right? That will get my unit cost down to this per ton. And again, there's lots of big trucks in the world, and there's lots of big mills in the world. So it's easy to benchmark. We're not at some sort of freaky point, in terms of what those costs are. So you have a mining cost and a milling cost that are well understood from other operations. And you're just going to mine a lot of tons. Yeah. And the benefit relative to other nickel projects, which again, most people don't understand, is most nickel deposits produce a 10 to 15% concentrate. You can have a 3% grade in the mine, and that produces a 15% concentrate. Yes, our ore is low grade, but because there's no iron sulfides in the deposit, we end up with nickel grades that are anywhere on average is 34% and can be as high as in the 40%. And so all of your downstream costs, which again in nickel, in things like gold and silver, they're basically negligible. You send your dory off and away it goes, and you pay a per ounce fee. And copper's relatively cheap, but in materials like nickel, because you have an effective oligopoly around the existing historic sulfide smelter refineries, it's a massive portion of the overall cost. And if we can produce something that's 3 times the grade of your average concentrate, that's a massive cost saving. Yeah, massive cost saving. And so, in terms of our path to market, that's the math that really makes these big ultramafics
right.
Very,
so
very attractive.
So it's kind of more predictable, and it's I guess what you're trying to do is it's an earth-moving efficiency exercise for you guys,
100%.
right?
Yeah.
So the bigger the scale, the better, actually.
Yeah.
And you're talking about amortizing that capital allocation over 30,
40 years.
40, 50 years,
Yeah.
right?
Yeah.
So the capital efficiency component of that is just a factor of where you choose to start, how you choose to start. Yeah. Because it will be slightly more expensive at the beginning, but once those kind of capital costs have been allocated over I assume the mill longer, maintenance, all that, vehicles, trucks, etc., maybe shorter periods, but whatever. But you get a sense of predictability about that, and that's attractive to who?
Well, the major mining companies, I mean, they don't want to screw around with, if you look at
10-year life of mine.
No, if you look in the gold space, Agnico spent, I think, $4 or $5 billion to acquire the Malartic operation. And they could have bought it cheaper until it was fully ramped up. Yeah. But, they wanted multi-100,000 ounce deposits, producers, because that's what moves the needle. Yeah. Detour, they bought Kirkland Lake for $11 billion. Yes, you had the high-grade deposit, whose name is escaping me, in Australia. But the real jewel in that asset was Detour, which was a sub-a-gram. They're now processing about 75,000 tons of ore a day. The mining rate's close to what we'll start out with Crawford. That was the jewel. And so, again, in terms of copper, Teck spent $7 or $8 billion building QB2. First Quantum, unfortunately, spent multi-billion dollars building Cobre Panama, which on life of mine is 0.38. they get some higher grade through the first years, but that's those are the mines. Big companies need to buy big assets that move the needle. And in the nickel space, they're not going to buy 1,000, 2,000, 5,000 ton per year nickel operation. They want 30, 40, 50,000 tons of nickel per year because that's what's going to move the needle for their business.
Right, and I guess the cost of capital for them is also reasonable because bigger balance sheet.
100%. Yeah. But again, even right now, this is the unique opportunity. They've got the bigger balance in a normal non-critical minerals market. They've got the bigger balance sheet. But today, right, we're going to get to spend $2 billion US in capital to build a mine. We're going to get 600 because we can store carbon and we're critical minerals. We're going to get over 600 million US of free money from the government. We're trading at a fraction of the free money that's attached to this project. So in a year or so, when the majors wake up and go, okay, oh, geez, Indonesia's not producing this much nickel. Oh, nickel demand is higher than the
Let's come back to that clean green bit.
Let's
come back to this clean green bit, right? Because when you said it, it kind of struck me, as it always does when you talk about these things, where you've got the likes of Samsung and other Korean and Japanese body manufacturers trotting over here trying to find, have a look at what's good, a few shekels in. To do that, they could, as you say, trot down the road to Indonesia, the Philippines, action, and say, right, everything I need, can you just supply that to me? And the answer would probably be, no, it's going to China. But the answer might be, yeah, we could. But they're not doing that because they're going to have, in terms of their, downstream for them, that's what it impacts them the most.
Mercedes doesn't want to buy nickel that comes from places that damage the environment and hurt local workers. Mercedes doesn't want to do that. BMW doesn't want to do that. Stellantis doesn't want to do that. GM and Ford, mostly don't want to do that, right? So
mostly,
So they don't want to do that, and so there's a very small pool of nickel that comes from mined in a clean green way that comes from quote non-Chinese controlled countries. And so again, not just the nickel. I would encourage everybody to look at other critical minerals that I saw the CEO of Perpetua, who has an gold antimony project in Idaho, and that's again, Chinese shut down antimony 2 weeks ago. The government's throwing all kinds of free money at, and again, that's the government's put a lot of money on the table. And the government's going to keep throwing money at the table to do whatever it needs to get the mines built to domesticate, all these critical mineral supply chains.
Critical means critical, finally.
Yes, 100%.
Remember the days when it didn't?
Exactly. It's only mostly critical.
Yeah, it's sort of like critical to very few people. Okay, so I think you have very clearly articulated a lot of the moving parts here. So if you use the business after today's announcement, you've got the template of Crawford. Obviously, it reads just that little bit better, Grace, a bit better. So you can apply some of the same thinking and maybe some of the same numbers, but just go, it'll be a little bit better. You've got all of these other things going on here, but today, so you've got to, between now and the middle of next year, to kind of get resources out. Are you the company, are you the team that's actually going to do all of that work? Do you need it to? Or do you think there's going to be a moment where people recognize, or the market recognizes, right, nickel, Timmins District, this is a good company, we need to kind of get involved a little more heavily. So, other strategics, when do they start moving?
Well, again, we've already got 3 strategics, in this story.
Others.
The others, the herd. The herd, again, because the news flow on nickel was so negative earlier this year, there's no one brave enough in big companies to really sort of step away from the herd much. But I think, by next year, it was said when, nickel demand's better than people think, Indonesia didn't produce as much nickel as everybody thought. Nickel prices are still, again, we're other than 5 or 6 years, the past 20 years, nickel prices in most commodity currencies are in great shape. They'll make that realization. By this time next year, we'll have our permits. That's our expectation with the federal and the provincial governments, and we'll have delivered 6 additional resources. That are hopefully all 1 million tons of contained nickel or better. And so once the market falls in place, once we get through that permitting milestone, then the big guys are going to continue to circle. All we can do is focus on what's in our control. So we've got a team that's, we permitted the Dumont mine back last decade. We've got a great team that's working, on getting those permits in place. We've got a whole team. The guy Des Tranquilla, who led the engineering firm that built Detour, is working for us and has brought a big portion of that team there. So we're completing the front end engineering design. Working that group and very happy with where things are landing on that front. So all we're going to do is keep focused on moving that forward. The financing, $500 million USD last week was a great thing. And again, EDC is regarded globally as a leader in sort of export financing in the mining space. Again, no surprise given it's Canada. And so having again, we still have to go through a bunch of additional. They've already done some due diligence, but we got to go through a whole pile more. But the ability to go down that path with them to be the mandated lead arranger on another financing. There's half a dozen other export agencies who will be buying trucks from, buying processing equipment from, selling nickel to them make batteries. That they'll all fall in behind. So the debt package. We've got very good visibility in terms of how that's going to come together. And literally on the equity stack, it's really down to that last $300 to $400 million on a project partner that we're working with.
And on a project basis. So here's I guess people will be asking and it's going, right, okay, so hopefully not a whole bunch of requests from you to existing shareholders about equity. It's a project level, right? So, but I'm sure there'll be something because you got to. Oh,
there's always a little bit of bits and pieces around the end, but we're not going to do again. I've been through a few cycles, and again, project companies get to the point where it's time to build the project. Their market cap sucks, and then they do this horrible deal where they're issuing 200% of their market cap. We're not going to anywhere close to that.
So that's insane. Right? We understand that's insane, and I know you won't do it, but at the same time, people are going to be going, right, okay, no more demands on us. Lovely. I do want some of the upside, or as much of the upside as I can get. So explain in terms of when you do project financing with that as part of that kind of capital stack, how Pubco benefits.
Yeah, so where we'll come out, hopefully. So right now, Samsung has the right to buy 10% of the project for $100 million US, which is $1 billion US valuation.
That's just from Crawford today, right?
That's Crawford today, right? So and then we're looking to sell another 20 to 30% for $300 to $400 million. Again, Samsung was negotiated off the PEA with feasibility study. We'll have permits in that time frame. The multiple at which you get a deal done, goes up as you tick more of those boxes. So, we'll be able to do that. So we'll still own 70% of Crawford, right? And again, we're 200 million Canadian market cap, 140 in USD.
Right.
And we own 70% of something that's worth $2.5 billion. Right? So we gave up 30%, but we still have $1.75 billion of NPV to pursue.
Right.
Off of that, and if we don't have to issue substantial equity to get there, then you, as one of the shareholders with that 140 million US of equity on the table, you get to participate, in that full re-rate to get there.
So that's exciting.
Yes. And then the even more exciting piece is, again, we can, we've got the template.
And by the way, I want to say here, it's not. Here's the theory. I wrote a book about it. You've taken care of a number of those pieces already. Now it's a question of completing that through with the economics and getting to that FID, and then someone like Samsung going, actually, I believe what you put together here. And then you're going to find, obviously, that, you need another group, whoever that may be. They're going to pick up the other kind of 20%. So, but it's not far away.
No. No. It's hopefully by 12 months from now, we've made a decision to build it. We've got our permits. We've got our financing partner in place, and we're charging down the path on Crawford. And oh, by the way, we have 7 other resources on the shelf. So you, as another mining company, goes, oh, okay, I like nickel now. Come to the store. We've got 7 on the shelf. You can choose. And again,
here's a template.
As a template, we can provide the engineering template. We can provide the permitting template, right? I mean. And we can provide a community template, right? The community's bought in. The permitting, still continue to go very, very well. And we've got the engineering template to build the open pit mine and to build the mill, right? So, it's
kind of feels like that's coming together.
Yeah.
Okay. And there's just one thing, I just want to be clear. So with the different projects, we talked about a sort of predictability around the ore body, and we're talking about across the board, across Timmins. We're not talking about Crawford there.
Right. Yeah, no, across Timmins. Yeah.
Across
so
Timmins.
again, we've got 20 targets, and we're drilling off a bunch of them, and we think.
So there's no new learnings required. When you say we've got the expertise, you actually have got all the expertise.
No, we did. Yeah, we did a pile of work, a bunch of our team on Dumont.
Yeah.
And there's, it's not 100% overlap, but there's a good degree of overlap between that and Crawford. Then we've got Reed. We've got the various Man, Northwest, South, Central properties, and again, they're not 100% overlap, but there's enough there that again, it's variations on a theme as opposed to I've got to come up with a big brand new mine design. I've got to come up with a big brand new mill design. It's
okay. So that's the appealing thing for another great.
Yeah.
Well, look, Mark, I know the day isn't finished. You've got to get back out there. Appreciate you making time for us. Really do. We'll speak soon.
Definitely.